pushed us back a little bit, but I'm glad we managed to keep the same panel here. I've had the great fortune to spend a bit of time talking to everyone over the last couple of weeks, and I've also asked that question, will 2024 be the year when institutional digital assets finally take off? And it's a mixed bag of answers, depending on who you ask and what sort of practitioner you're talking to, but without question, what we're seeing is a period of enormous change, an enormous opportunity with it. You know, going back to the launch of the Era of Convergence in this room just over a year ago, we were sat there at the time having to redo the last bit of the documentary because things changed in a matter of weeks with various factors that we don't need to talk about too much, but a bit of trauma around all of that sort of thing. But it's created this sort of increased opportunity and probably accelerated, in my mind, this convergence of traditional and decentralised markets, creating loads of opportunities. And those opportunities are absolutely being taken by this panel here today, and I'm really, really excited to introduce them all to you. So I'm going to pass the mic down. I'm Toby Babb, as you heard before. I'm going to pass the mic down here and give everyone to give themselves a brief intro.
Can we do that through the mean of song? Or?
Please do, yeah, rap if possible.
Rap, yes. Good evening, everybody. My name is Richard Baker. I'm the founder and CEO of a company called Tokenovate here in the UK. We're a fintech company, and we focus on the more traditional assets. So I'll be talking more about over-the-counter derivatives, exchange-traded derivatives, and the role of digitization of workflows to enable traditional assets to participate on blockchain technology, on smart contracts. And that's probably enough of an introduction.
Hello, my name's Oya. I'm the sales director at Jacobi Asset Management, and I will probably mostly be talking about Bitcoin. At Jacobi, we've launched Europe's first Bitcoin ETF in August of this year. So while the underlying is a digital asset, the ETF is a pretty vanilla product, which I'm sure we'll get into.
Thanks. Hi, I'm Elise Soucie. I work at GBBC Digital Finance, which is the largest industry association for blockchain and digital assets. Prior to that, I worked at AFME, leading their digital assets work with capital markets banks. And prior to that, the FCA, which you might either love or hate depending on your views. But I come very much from a policy and reg focus, so really looking forward to speaking to you guys today.
Hello everyone, Duncan Trenholme, Managing Director and Global Co-Head of Digital Assets at TP ICAP. In case anyone doesn't know, TP ICAP, we run various businesses including ICAP, Celiktemur, LiquidNet. We're one of the world's biggest venue operators for financial markets. We started our digital assets business about 4.5 years ago. We operate a broking desk for crypto derivatives. We run a spot exchange for crypto out of the UK. And we're also working on various projects on how we can run digital assets within our traditional venues and traditional asset classes. And thanks very much for having me here.
Absolute pleasure, and I love the fact that everyone's got a slightly different part to play in the industry over here, and there's lots of innovation, lots of excitement that we're talking about. And we'll start a little bit by setting the scene as we go on this sort of journey, because Duncan, I think it was you who said to me, probably a good place to start is what do we mean by institutional digital assets, because I think everyone's got a slightly different view of the world. It's like when we first started saying we call ourselves a financial services technology business or a fintech recruitment business or whatever it is like that. Everyone's got a different view of what fintech means in a similar sort of way to institutional digital assets. So kick us off a little bit and tell us what you think we mean by institutional digital assets.
I can certainly say how TP ICAP look at it in general. For us, digital assets is an all-encompassing term that basically refers to any asset that exists as a token, so listed on a blockchain or a DLT, and that can be either sort of public open source blockchains or private consortium DLTs. And largely you think of that as a new asset class, so crypto, so a lot of the tokens that have come up from public blockchains, but also if we see like a bond instrument on a public blockchain or a bond instrument on a private DLT, we would classify that as a digital asset as well.
And with regards to, you mentioned this a second ago about the sort of various different elements of digital assets that you're seeing, and your parts of playing in the space. When you look at this question, how do you position yourselves and Jacobi in the whole story?
I think there's two parts to institutional adoption of digital assets. One is the technological infrastructure, so facilitating custody, trading, interoperability with traditional capital.
Never an easy word to say, that, isn't it?
I practiced as well. And the second part is the investment part, which is where we come in. So, people like ICAP are doing a lot of work in terms of minimizing the hurdles for the infrastructure, whereas what we're doing is minimizing as many hurdles as we can for institutions to actually invest in the asset class. Because you could try to go and buy Bitcoin directly. As an individual, it's painful enough, but as an institution, it's a lot of operational and technological risks, whereas in an ETF package, it's very familiar and a lot more secure.
And Richard, when we talk about the crypto being used as an asset at the moment within the industry, I know this was something you got very animated when we were talking about earlier on. Give us your view of where that sits.
So, I'm probably not a crypto fan on this panel. I think, does the world need 22,000 crypto tokens? No. I think it makes it very, very difficult for institutional investors to decipher the market. So I do think we're in a period of, there is a long tail of assets, and I think the work that my panelists here do to try to help break down that market and really relate to safer, more stable protocols, tokens that have been issued in particular jurisdictions and under particular formats, and really helping institutional investors understand those from ICO-based tokens that may very quickly disappear. So firstly, I think there's a fundamental landscape problem still, and we're talking about an industry that's been forming for 14 years now. But it coincides with, and Duncan's introduced it really nicely, but we're also seeing now the underlying technology and the transformation that technology really presents to traditional assets. We are now seeing traditional assets being expressed as digital assets. I had the joy of just being in Singapore for the last week at the Singapore FinTech Festival last week, and I think we see something between $5 to $7 trillion of assets that are targeted to be transformed just in the next 5 to 7 years as well. And so whether that's cash instruments being presented as stable coins, or whether we're seeing bonds being presented as registered tokens or claims tokens or bonds tokens, we are about to see an explosion converging what is currently crypto and what will be stablecoin versions of traditional assets. So I think the landscape is getting exciting, but it's also making the challenge of deciphering it even more complicated.
And I guess the complication sort of leads into the whole view of obstacles and adoptions, because again, I've been speaking to the panelists here over the last couple of years about this is something which has been talking about taking off for a long time in the space. And whilst we've had hype cycles at various different phases of where adoption comes in, and I think one of the big pieces that we did halfway through this year was to talk about restoring trust in digital assets. The Realisation Group put a great white paper together on it all. We've had various episodes of FinTech Focus TV focused on it. Duncan, I think you started one of those as well. But it's a really interesting space there to look at those obstacles and think, right, how do we build that trust to take this new and exciting opportunity mainstream? At least part of that is all about the policy that we sit behind. So give us your view on where we sit with that at the moment, and what needs to happen to get institutional adoption.
So I think, and I know to be fair, this question was directed at Duncan, not me, but I think that when we think about institutional, really a lot of what we mean is big regulated firms who are already under a lot of regulation, but they also have a lot of money as big institutions to invest. But I think when we think about the broader adoption, what do they need to feel comfortable investing? What do they need to feel comfortable getting involved in this ecosystem? They need to know that they're not going to be under a punitive regulatory treatment, so they have to have legal clarity and regulatory certainty. If you're also a large institution, you are most likely operating on a cross-border basis. So that has to exist not just in one jurisdiction, but it has to exist across jurisdictions. And so I think I think there has been a lot of work done this year in the regulatory space. We've seen more consultations and developments in regulatory frameworks globally than any other previous year for digital assets. However, there still has to be that cross-border connection, because when we say institutional, I think a lot of times what we really mean is regulated firms. However, I want to caveat this by saying I don't think that that means that everything that's involved in institutional should be regulated like a capital markets bank, because there's a lot of other things there as well. There's the protocols, there's the developers, and that's very different, and they have a very different role to play, and they will contribute to institutional adoption. But I do think that that regulatory certainty globally has to be there for the big players to get involved.
And that sort of ties in with the education around the whole thing as well, right? And how, this being such a consistently new area for people to be looking at, that sort of ability for people to sort of skill up and to understand where they're going is part of the issue. How do you think we solve that from an institutional basis?
So I think there's a couple of pieces to that. I think one, there has to be the public-private sector cooperation, because realistically, and I think a few of us were talking about this before the panel started, but public sector doesn't have the budget to hire in people that have made a fortune in crypto. They just don't. So I think that there needs to be that public-private sector collaboration, but in a way that's not patronizing, but it's truly a partnership and working together. But I think also there needs to be an education piece, broadly across financial services, because if you're a big institution and you want your other silos of your big bank to get involved, you need to convince them that it's worth their while, that it matters to the P&L. So I think there's an internal education piece that needs to be done there as well, though I don't work at a bank, so, take what I say with a pinch of salt.
So speaking about it from looking at these various obstacles, or I'm going to turn to you here, because sales is all about dealing with objections and obstacles, isn't it? So tell us a little bit about what you feel the main institutional obstacles that sort of slow adoption down being.
The feedback we've had the most has been we just don't know enough about crypto. And I think the events of the last few years, some people have said we just don't feel like we're missing out. And post FTX, they said, oh, thank God we didn't get into that. But the sentiment has definitely changed in the last 6 months or so, where they're asking us to teach them about it. And they said no one's offered to talk to them about what blockchain is, what cryptocurrencies are, how would you go about investing in it, what the risks are, and everything like that. So I think for us, the biggest pushback has been we don't know enough about it, and we don't know how to educate ourselves, because there's a lot of information out there. I mean, I spent 15 years in banking before moving over to crypto, so I know firsthand that the funnel of information is just non-existent. There's so much, you want to type something learning about blockchain, and then you end up talking about yield farming or something like that. So it's people like us who just go around literally knocking on fund stores, asset managers' doors, and say, let us talk to you about this asset class, so you do your due diligence, and then you can make an informed decision on investment.
What convinced you to make that move? Because again, if we talk about this sort of move from the traditional world to where the whole worlds can converge, what was it that made you move from those sort of years in banking to say this is something I had to get involved in?
So I was working in prime brokerage at Morgan Stanley, and having spent 10 plus years in the bank, I was still sorting through trade breaks, payments not going through, client onboarding, KYC, so a lot of inefficiencies. And I knew a little bit about cryptography and blockchain because I studied it in my master's, so I could see how this would help make capital markets a lot more efficient, not from a trading infrastructure point of view, but for all those other things as well. So I got interested in the technology and I believed in it, and I wanted to help build something and educate others who believe in it as well.
Perfect. Duncan, I want to turn to you because I see you regularly all over the world at events speaking, and I think most people will have bumped into you at something somewhere around it. And we look at the sort of, we mentioned before multi-jurisdictional issues. You've got offices, I know, in North America, and there is a massive disparity between how it works in each of those regions at the moment. Going back to Asia, and Richard, I won't steal your thunder, but you spoke a little bit about Singapore earlier on, and how the the feeling was the US was 3 to 5 years behind on all this. Tell us what the sort of global nature and the adoption rates at various different levels do you think mean to the industry?
Well,
I
it's
hadn't prepped you for that one either, so catch that.
You have to, or at least how we look at it, you have to look at crypto different to blockchain DLT implementation in traditional markets, because sometimes our team like to respond, a bond is a bond is a bond, irrespective of what technology it's on, whether it's on in a CSD, whether it's on a blockchain. And that falls within existing, say in Europe, MiFID regulation, within the sandbox of something like the European DLT pilot regime. So when we're thinking about our traditional asset classes, I think the most important thing is these sandbox environments where you're, as a existing market infrastructure provider, and we run MTFs in multilateral trading facilities in Europe, when the EU comes out and says, hey, you can test running your trading venue but on assets that are digital assets, that gives us the right regulatory framework to begin exploring this. Crypto, very different, because you end up doing a lot of country by country analysis, like can we service this country, can we not, does it have specific crypto regulations or framework, or does it, as we are expecting with MiCA coming in markets and crypto assets in Europe next year, you'll have block-wide regulations on crypto assets. So to answer your question, I think one of the things we've had to do is get our policy and internal counsel up to speed so that they can become a conduit from industry forums and places like AFME and things like that, so that they know what's upcoming and how that relates to the business. And as boring as it sounds, it's just down to making sure that business and internal teams are like in the loop and understand that you've got to stay abreast of crypto developments and blockchain DLT developments.
Policy is not boring.
No, sorry. Doing the internal coordination is not policy. One thing I was going to say on the previous point, I do think that, yes, I'm sometimes at different events around the world, but I do think people talk a lot about real money coming into crypto, and I think what's under sort of discussed is application of blockchain technology, because they are also, or people who utilize blockchain technology who then hold crypto assets or tokens off the back of it are also participants in wholesale markets. And yes, crypto is wanted for 4 or 5 years for this validation to come from real money coming into the space and overall valuations growing. But one of the things that I see that's different maybe in the last 18 months to previously is interest coming to us at TP ICAP from firms that don't really care about crypto as an investment thesis. They just happen to have some crypto as a result of something else they're doing, and I think that's really important for the industry because it's starting to show signs of the technology actually being used, and you're not just getting people going, hey, let's speculate on crypto because we think it's going to be worth a lot in the future. And some examples of those are, like, our business is sat within the energy and commodities franchise, so we have some energy firms that are bizarrely mining Bitcoin with their spare electricity that they can't sell to the grid because grid demand is non-linear, and then off the back of that they're like, we have some Bitcoin, what do we do with it, how do we sell it, or how do we hedge ourselves against price volatility. Another that we've seen is corporates that want to engage with their customers, and instead of using like a loyalty program, they've issued NFTs to their customers, and then they're like, I need some Solana or some Ethereum to pay transaction fees, so I have to get hold of some of this, right? So those are early stage, and it's very periphery stuff at the moment, but really exciting things because I think it shows a diversifying client base coming to crypto.
You're nodding a lot there, Richard. I know you're itching to tell us all about Singapore. So coming to your view of the global world as well, and I think there's a lot that will resonate from what Duncan just said to you as well.
Yeah, I was actually nodding more around the fact that actually I think the blockchain technology at its heart is a highly distributed system, and it has the capability to automate workflows. That's the boring side of things, and make markets more efficient. But I think it sits very synergistically with the role of an over-the-counter broker. And then what we are seeing is, I think perhaps to take on what you've been saying there, Duncan, is what are we talking about here in terms of these new money rails systems? So firstly, we're talking about different forms of payment rails. So a very big part of blockchain technology is bringing out something like the Ripple network, which wants to be the next generation of a payment network, a cash system. So we know society is going to change in the next 15, 20, 30 years, where our physical cash will fall away, and we will transition through a few mediums, but we are heading towards a full new digital rail system. So the question is, will we have one rails for the world? Is it Bitcoin that will win out and be the ubiquitous money rail system for the world? Or will we have sovereignly protected money rails for every jurisdiction? So I think at the moment, if we marry up probably the requirement for regulatory oversight in every major jurisdiction of the world, we will see innovations where money will be modernized per market, and therefore we will have fractionalized markets, and therefore we will have new assets to trade. We've got swaps to do. We'll have new assets going on venues. So I think the fundamental, firstly, that we have to remind ourselves of is we're in a big era of innovation for our money system to change globally. And I've neatly stayed away from central bank digital currencies and all of that. Stepping back now for a second, we have very large asset owners that have never ever really been able to put their assets to use properly. So if I've got a large portfolio of property, or from an iron ore mine, and I want to create a digital twin of the assets I'm sitting on that represent, my long book value, whilst I'm digging out and trading in the short-term market, there are many, many new applications of being able to use this technology to represent the value of the underlying asset that could go into custody and be traded in a new set of trading rails. So I think we are going to see, frankly, an explosion of digital assets over the next 10 years. But I think the reasons for the different digital assets will have different underlying market drivers. So I was nodding because I'd love to be a broker in this new market, because I think there's a really big role for over-the-counter and MTF-based broking. Long answer. I'll come back to Singapore.
We've got time for that as well. So let's talk. I know you mentioned this when we were chatting as well. There's a lot of win areas. We're talking here about evolution, rather than revolution. I think has been the general sort of consensus of the conversations that we've all been having. But if you look at the sort of win areas that you mentioned to me, payments, tokenization, to the technology, etc. behind it, where do you see the sort of real evolution happening in the space? Where are the real opportunities for growth?
I think there's been a lot of headlines in terms of tokenization in the last year. Most big banks have come up with something that they're tokenizing, but again, I'm going to come back to the word that I have trouble pronouncing. It's not interoperable within each other. So I think that's going to be the next big thing, where banks can maybe settle tokenized version of relatively less liquid assets with each other. So I think that hasn't been done yet. It's far from being mainstream, but to truly change the underlying infrastructure of capital markets and make it more efficient, that certainly needs to happen. You can't just have your own blockchain and move things around. It's great to be able to do that, but if it doesn't connect well to the other banks or other counterparties, then it's not really achieving. So I think that's going to be the next big iteration.
Elise, maybe jumping straight onto you as well in your fly.
Well, yeah, so I just want to pick up on a couple of things. So first, you had mentioned interoperability, and you mentioned all these different payment rails, and I think what a win looks like to me is, to use the example of like Netflix and cinemas, they both still exist. I think that a big risk in the years to come is fragmentation, because just because we have the option for the new payment rails, that does not mean that RTGS or any other existing payment rails are just going to disappear overnight. And so I think there are a lot of questions to still be answered and challenges to be solved about interoperability across networks, about interoperability across protocols, about interoperability across smart contracts. And those are all different types of interoperability and different things. And I think we need to start, separating those out, unpicking them, thinking about what that will look like. And I think that would be a real win, is if we could have that across these things while they continue to coexist, because I think fragmentation will be a real challenge. And of course, fragmentation across jurisdictions, I keep banging on about the cross-border thing, but that will have to come into play too.
Just want to know who's Blockbuster's in that whole story then.
Well, Blockbuster, not still there, but the cinema's on. The cinema's on.
Still going. Cinema's still run. There was a really interesting piece that Duncan, we spoke about where we talked about the electronification of the markets, another easy word to say, the electronification of the markets, so that's sort of 20 odd years ago, and how this has a similar sort of feel to how things change, but it's not necessarily a flick of a switch. What's your take on that?
We think of it like electronification, but for post-trade and downstream, right? Custody, clearing, settlement, that side of things. Same type of step change, and we see it when we look at implementation on our side. I don't think that all the technology that's being built for matching liquidity, whether that's a auction-based protocol, a request for close, a central limit order book, people have spent 20 years developing tech and implementing it in different asset classes. And largely, I think that's not going to change. That's going to continue on its path. But downstream, you're going to want to settle it on-chain in a much quicker time than you can do currently. And I think that's gaining traction. When we touched on tokenization earlier, and Elise said that a lot of different banks are looking at tokenization. I think one of the things they see is it's painful settling trades in general. There's a high operating cost to it. There's a lot of fails. You get hit with late settlement fines, and it's a general drag on performance as a business. So if you can bring those costs down and reduce fail rates and maybe automate some things, I think it's quickly understood why that's something worth pursuing. But I'll touch on Elise's point here about these things are networks. And one of the things that we saw that changed our perception of how we view this technology is rather than thinking about it like a technology you as a firm can implement in some way, which I think has led to some firms running their own chain. Think of it like, and it gets often overused in crypto, but like the internet analogy. But if you think about like if we're connecting to a network, one of the things you clearly look at is well how many other people are connected to this network, because the value goes up the more others are, and that's the risk at the moment in the industry of fragmentation, because it's all well and good if you've got a big corporate franchise and lots of clients, you can run your own chain and you can do a lot of good business there. But if this is going to scale, you need the industry to be on the same network, and that's a coordination challenge, and that's why you see the kind of public chain, private chain, industry consortia, different themes playing out at the moment. And really, I don't know how that's going to play out. So.
But it is a collaborative sort of space, isn't it? I think this is one of the areas in finance where you can see people wanting to work out difficult subjects together. Richard, you showed me various bits of your presentations and the company, and there was so many different catchphrases in there that I absolutely love, but predominantly around sort of driving innovation and rather than just pure disruption of the sector. And I know this is something you're very passionate about. So tell us a little bit about your thoughts on evolution and against revolution.
Yeah, I think I don't see a revolution. I do think we will have to embrace a evolution. The challenge in an evolution is that we've got survival of the fittest to also think about. There is no doubt that the underlying technology of blockchain and smart contracts and being able to natively write a token or create an inscribed digital twin to represent an underlying asset, the pace of that technology is incredibly nimble. It's very fast. That has the promise to revolutionize an organization, but you have to marry that opportunity up with compliance, with regulation, with education. You have to bring the people also on the journey. So I think for that reason it's an evolution. I do think, to Duncan's point, there is a significant opportunity to solve T+2 in this industry, finally. You can treat the blockchain as a common ledger for all. At the end of the day, blockchain as a foundational technology was invented to be a record keeper. It is a timestamp record keeper, and it is on the on the right protocols, it's a digital ledger for debits and credits and triple entry account keeping. So you've got some underlying principles in public ledgers that allow you to solve a lot of problems, and everybody has the same record at the same time. So you can achieve settlement finality on certain chains. So I think evolution is the way to go for the short term. So in automating the life cycle of a trade, I think we stand a chance of taking a significant amount of cost and complexity out of the life cycle. And I think doing that gives rise to new asset classes being able to be mobilized much quicker. And now I will just comment on Singapore. So, if you don't mind, I think huge innovation last week. 60,000 visitors for the Singapore FinTech Festival. But MAS, the regulator, I think has done us all some good in the fact that their Project Guardian program, which has been running for the last couple of years, was a flagship kind of talking point throughout the conference. A number of very big, well-established banks have digitized bonds, have been trading new rails, have been interconnecting to existing networks. And so you're seeing custody playing out now on a digital ledger technology, and you're dealing with interoperability across different banks and how trade record keeping will be kept, books and records. And I think smart contracts being overlaid to that workflow to really start to tackle customer propositions and starting to create new value. How do you fractionalize assets? How do you express them to new customer groups in new product styles? I said so I think without going into everything that was at Singapore, that project being underpinned by a lot of institutions gives you a signal as to how quick certain regions of the world are moving. But it is regulatory assisted, and that is a very important point. And my comment about the US being a bit behind is unfortunately because we've got a incompatibility between the Fed, the SEC, and the CFTC at the moment, which has really set the US back considerably, and I don't see that unlocking itself anytime soon. So I think there's a very big opportunity for the Europe zone and for the UK. Europe is probably a flagship regulator at the moment with MiFID II, MiCA, DORA, and FCA come next year. I think we're going to see the brakes come off and the market starting to move in the UK. So we're poised for some interesting times in 24.
Definitely. And part of that is well, you mentioned before about education and narratives and such like. So if we're to look at what narrative we need to see coming out over the course of 2024 to increase that confidence, to increase that adoption, what do you see as the pivotal parts to creating that story? What does the story need to look like?
I think you touched on regulation in the US. One of the big catalysts that's coming very soon is the US Bitcoin ETF approval, and I think markets pretty much agree that it will happen, and our view is that they're going to approve all of them at once to not give first mover advantage to anyone. And I think when that happens, one, it will be direct capital flowing into the asset class because people like BlackRock are going to put their distribution force behind it. But I think more indirectly, it will legitimize crypto as an investment. And I think the FCA, and you might disagree with this, but they will see the SEC, who's been vocally very anti-crypto, finally accepting this as an investment and opening access to a lot more investors to be able to access this asset class. I think that might push the FCA to speed up a little bit and be more open to regulating crypto in a clear and efficient manner.
Sounds like a good time to bring you in, Elise.
Yes, so I mean, for those who know me in the room, I've waxed lyrical about this before, but I think it's important to think about two things, and I'll come back to the US point as well. But in the UK, before the Financial Services and Markets Bill passed, the FCA did not have the powers to make crypto legislation. That only passed in July of this year. So appreciate that it was slow, and I don't work for them anymore, but I do think it's important to point out that they didn't have the powers. They had powers to do things on financial promotions, and they did, and that's why we saw that first. But until the Financial Services and Markets Bill passed, they didn't have the powers. And now what we've seen, just a couple weeks ago, is the publications, the joint discussion papers on stablecoins. They've set out their roadmap, so I think they are trying to move quickly ahead. But I do think it's important to caveat that point. In the US, though, I think that there have been some really interesting regulatory movements that maybe haven't got as much attention as the ETF, which is, for example, Treasury and the IRS. They consulted on the taxation of crypto and digital assets. They consulted on rules for brokers. It was a quite expansive piece of legislation, and I think very important because, forgive me, I'm American in case you couldn't tell already, but Treasury, they're really driving the cart in the US. And so I think that this is a really important signal about what's to come. We also saw recently CFPB just issued a consultation last week, and that's their first sort of foray into regulation of crypto assets in the US as well. So I think that, yes, maybe the US has been a little bit slower, but I do think that there is some sort of a plan there as well. So as I said, biggest year yet this was for all the consultations and framework evolution. I think there's still a lot of work to be done in 2024, but once those frameworks come into place, I think that will give much needed certainty to the market.
Fantastic. And Duncan, if you could have a magic wand for institutional digital assets in 2024, what would you be looking for? What do you think would be the sort of defining piece that could really sort of drive this industry further forward?
That's a big question, isn't it?
Yeah. Again, I'd love to screwing you up with an answer that I haven't even prepped you for today.
For me, and I hate to go back to the same topic, and I'm not necessarily an evangelist for crypto or the technology, but I do think there's some potential there in terms of settlement, transfer of value. Anyone with an internet connection can send value anywhere over the internet, which is great, right? And you definitely want regulation and the right coordination around it, and things should be done in a safe manner, and investors should be protected. But I would like to see more examples of this technology being used at scale, and not just periphery or niche kind of types of use cases. I mean, you could argue maybe remittances, and that's why stablecoins have taken off so much, because people have been able to send cross-border relatively easily. And we get companies approaching us saying, can you support USDC, can you support Tether, that's how we send money around now. It's just like, oh, okay. I mean, we don't currently, but that's really interesting to see. So yeah, I'd like to see the magic wand waved, and the real world economy starting to use blockchain, and it not just being a kind of investment type case that is proliferated around the industry.
Perfect. I'm going to open it up to the floor in a minute to let you all ask your questions, etc. But before we do that, I've asked this question to each of you and had different answers on each part. So we're just going to roll all the way down now, and finish with this last question for me, which is: will 2024 be the year when institutional digital assets finally take off? So I'm going to say, if you're, and I know your thoughts might have this have changed in the course of the last week or so, but if we're talking about that and saying, right, why not? Then what will we see across the space? And if we're talking why, what are going to be some of the things that really drive that? So we'll start here and work down.
So when we briefed a few weeks ago, I said no. And I think I've changed my view to yes. But I do think it's jurisdictional. And I do see South Asia booming. And whether it's repo, whether it's cross-border, I see SWIFT interacting with a lot of trials at the moment. So I think we're going to see it go from Southeast Asia. I think I'm bullish that crypto has a role for a period of time, but I do think there is a transition through stablecoins to new payment rails and cash systems that it will take longer. So I do think 2024, from a regulatory point of view and from institutions paying more attention for the right reasons, is a turning corner. It is a year that will start to take off, yes.
Fantastic.
I'm a yes as well. I think from a regulatory standpoint, from a technological infrastructure standpoint, and more relevant to what I do from an investment standpoint, because I've seen very conservative asset managers or even pension funds who would not even look at this asset class ask more about it, and I think that's a great start because they want to know about potentials of blockchain, how would an investment look like in your portfolio, where would it fit in your portfolio. So I think, yes, I think it will be gradual and slightly bumpy takeoff, but we will get there.
So I don't want to be a downer, but I'm going to be a no. And I think this is just for the reason of timelines. So I think if you look at the regulations, even if you take the EU and MiCA, we are on the level 2 regulatory technical standards, many of which are not going to come into force until 2025. And then you're also going to have level 3. And so I think that, and that's one of the more advanced jurisdictions. So I think, the UK is still building. There are some jurisdictions, like you said, in Asia where they have had a framework for quite some time. But I think until we have almost all of the main jurisdictions where companies want to operate, having a very clear framework from a regulatory perspective and legally, and they're talking to each other, and there are multilateral agreements in place, I don't think then, until we get to that point, I don't think you'll see the great takeoff. So I think in 2024, we've still got a lot of work to do, but I'm very hopeful for 2025 and beyond.
Can I split my answer?
Go on.
Is that allowed?
Sit on the fence.
Crypto, yes. Digital assets, no. So like wider digital assets, traditional assets. So I think if you went and asked our brokers, they'd say crypto is already institutionalized. It's a fledgling asset class, but based on the profile of client types that are trading through us, there's a range of banks, asset managers, hedge funds, volatility funds, crypto natives. So it's hard to say that that isn't institutional already, and I agree there's a difference between institution and how wholesale markets think about institution. But yes, there's a small fledgling wholesale asset class there in crypto, and we see a cumulative onboarding on a month-by-month basis, and new people come to the market. Tokenized digital assets at scale, I think that's a 5 to 10 year secular trend. It's going to evolve at the pace of electronification, and I think it will get hold in some asset classes first, where there's problems to solve and where cost of operation is very high to start with. But yeah, that's going to take a while.
Go back again. I think it's really fascinating, the sort of diversity of thought around where we're at with all of this, and of course there's different areas that I think sort of take a grip at various different times as well. So that's what I've loved about this particular subject. You've got no two views exactly the same. So let's open it up to our panel here. Please don't be shy. We'll far away at the start.
So I'm going to ask a question. Maybe I don't really have a full understanding about it, but so we all know that AI has come into a wider consciousness now. Everyone understands what AI is a bit, or maybe to some degree. And as I understand it, AI is very important when you come to smart contracts. And they're like, AI is like the engine. And I'm always surprised, or you can see, maybe I'm wrong, but why, I'm always surprised I don't hear people talk about the role, the positive role AI has to play in this new market. And then if it does have a positive role, how much will the lack of regulation around AI hamper the evolution or the revolution?
There's the most topical question of the day. For sure.
I'm sorry. So I'm only going to try to answer part of that question. I don't know if other panelists have views, but I think that, to my view, the danger is something you mentioned earlier, which is about trust and also about fear. And I think AI is very much in danger of going the same way as DLT, where it can get conflated with one very small piece of what AI does, and then you might see fear-based regulation evolve because of fear of one component of what it can do. So, to my view, the really important thing would be, when discussing it, to be very clear about what AI is doing in relation to financial services, in relation to blockchain, and to be very clear with the terms that we're using and the discussions that we're having with regulators. I think that, goes for everyone, because I think, to your point, we have to separate crypto from DLT, from AI. You have to be very precise in your terms. We have to get, taxonomies developed, because otherwise it all gets lumped in together, and then you have just fear-based regulation instead. So I think that's the danger, but I think it's absolutely a very important point. I don't know if anyone else had any views on that. That's what I would say.
Yeah, I would echo the same. So we're a smart contracts company, and right now I would say smart contracts are conditional logic systems. And so it's equivalent to you going to Excel's and being an advanced user in Excel and writing a whole sequence of if this, then that. And I think, to the point of standards, we work very closely with ISDA for derivatives. I think ISDA has done a great job in the last 4 years laying down a standard taxonomy library for digitization of an ISDA master agreement and credit support agreements, and we've seen that happen also in futures markets. So you're talking about, right now, very basic data science, creating digital libraries and taxonomy systems so that you can actually stabilize standards, so that you can start to apply machine learning. We're way before AI. I think the best description of AI I've seen in the last month is, or generative AI in particular, is, all of these small and large language models can be equated to individual experts in this room, where we've really just got a synaptic pathway that represents one knowledge base, but generative AI has managed to converge all synaptic pathways of all underlying knowledge bases from various language models, and so we've created a central intelligence engine. So AI is an intelligence knowledge network. So the question is, how do we apply generative AI to trading systems and to helping us run, alpha in markets, or what are new markets? And we're experimenting in certain sectors, but we're certainly nowhere near using AI or generative AI to infiltrate and run these systems just yet. I think there is a long way to go.
All right.
First of all, thank you very much. Very good panel. Question going from a regulatory standpoint for you. You mentioned the term interoperability. So interoperability between protocols is an issue. Do you think there needs to be more interoperability between legal and regulatory frameworks in that sense? And if so, what does that look like, and how can it be more effective? Because fragmentation is arguably leading to less institutional adoption, which at this current point in time could really help the economy.
Yeah, so to answer your question in short, yes, absolutely. And so, last week, we also had Digital Assets Week London, and one of the things I heard a panel discussing about interoperability is they said, it's 20% just getting the token onto someone else's rail. They were like, that's the easy bit. They're like, the 80% is making sure you've got all the same KYC, compliance, all of that legal interoperability. So yes, completely agree. I think that is, when I was mentioning, all of the things that need to be sorted out at protocol level, at network level, smart contract level, that's a huge one. And I think, the end state, the goal would be if you could have some of those common standards globally for the network that Duncan mentioned, which could make it easier and simpler for that to happen across jurisdictions. So, short answer, yes, super important.
Another question here, Ben?
So I think most people in this room would have the general feeling that we are moving towards a global tokenized economy, but we're all haggling over the pace. So I guess I'm interested in your view of whether you feel like the efficiency of financial system in the current networks is the main driver right now, or you think it is the actual access to new asset classes. There's lots of things we could say. You can unlock the economy, you can tokenize things, you can provide liquidity. So I'll put that into the new asset classes. So do you feel like it's the first bucket, and efficiency is going to drive it for the short term, or do you feel like the new asset classes will drive adoption?
I think that's like going back to 1999 and saying, is online video going to drive internet adoption, or is it online commerce? It's kind of both, I think. I think if you're a big financial services firm that operates in traditional markets, you see a use case of bringing down your operational costs. But if you're a fintech and you're looking at carbon offsets and growing that market, and you think maybe there's a way of getting it into the hands of a broader investor base, because retail clients have digital wallets and you can drop that product into their investment portfolio. So I think it's both.
We've got time for one more question, so we'll fire that.
Hello, yeah. Do
You think answer the rest of them
yeah,
later on over a few drinks.
Thank you very much for your time this evening, it's really good. Do you think BlackRock are looking at the digital assets, or the digital asset ecosystem, and the Bitcoin ETF through the wrong end of the telescope? They're using traditional methods to regularize and contract the ETF, instead of using the Bitcoin blockchain to codify the contract, and then issue the ETF token, and then settle and govern that using the actual Bitcoin blockchain.
I think BlackRock are going about it the way they know how to go about it. They're not a technology company. They're an ETF company. They're an asset manager, biggest asset manager in the world. So I think if they didn't believe in the technology and the infrastructure, they wouldn't have gone down the ETF route. And I think they've publicly said, when there was a fake news leak, as happens a lot in crypto, unfortunately, about the Bitcoin ETF being approved. I think Bitcoin price jumped like 10% in an hour, and then BlackRock said, oh, that wasn't because of the news, that's just people moving into crypto as a safe haven asset, which is a huge thing coming from BlackRock. So I think they are going about it the right way, because that's the way they know, and they have a 98 or 99% approval rate of ETF applications with the SEC. So I think, the fact that they're putting their weight behind it says a lot.
It'd be interesting to get Richard's point of view as well.
No.
So I know the question you're asking. So I would agree firstly that we do need large, trusted financial institutions like BlackRock to help bring these asset classes and these technologies into the limelight. And I do think an ETF structure has trust in the macroeconomy. Consumers and investors know how to participate in those structures, and so something that's exchange traded and index linked is going to be good for that asset class into the long term. Yes, the other side of that is it is being built wrong. It's a virtual representation, and it is detached from the implementation of the technology. But I think there are other battles in the world that are tackling that challenge and trying to make sure that Bitcoin finds its way to be an understood protocol. It is, in my humble experience, the most misunderstood technology on the planet in the last 15 years. And it's embarrassing for society that we're taking so long to understand the good of this technology, not the evil. But I don't want to get too drawn into that tonight.
It's a good question. It's okay to jump in.
I was going to say, take us home, Duncan.
I kind of thought about that one as well, because wrong, right. I think it's about, the way I guess it's settled in my head is it's about distribution and access. And I think it comes down to the fact that humans or firms have their biases and they're inherently lazy. And I think that if you or your firm invests through a specific method like ETFs, then it's easy to add a Bitcoin ETF to your portfolio than it is to go and buy spot Bitcoin and get yourself a new digital custodian, right? So I don't necessarily think it's right or wrong. It's about getting the product out to different end investors who have their biases on which investment structures they like to use. So I think we've seen retail investors set up digital wallets, and sometimes they self-custody with a self-custody platform, and sometimes they use an exchange or a custody provider, and they get access to the investment case of Bitcoin. Equally, if you prefer to use ETFs or you prefer to use futures, because that's what you do every day, and there's always economies of scale of having multiple products on the same investment structure, then that's okay too, I think.
Go on in.
Very last point, I promise it will be quick. But also, you know, there is a regulatory angle to this as well. And as you said, if you're someone or a firm who wants an ETF and you've had conversations with your regulator and they said, hey, we don't want you to be involved in crypto because we think there's a huge risk and we're worried about you getting anywhere near that, then the ETF is safe. So I think there's that angle of it as well.
There you go. And look, just about the closest I've ever been to being on time for one of these things as well. So well done, gang.